Hello everyone, welcome to the market outlook for the midweek. Gaurang Shah here from Geojit Financial Services. And after seeing a choppy ride last week, we recovered this week on Monday morning. Yesterday we lost quite a bit of ground that we had gained on Monday. And today, as we have begun the trade this Wednesday morning, we started off with a negative bias, but there has been a smart recovery from the lows that we have witnessed today. So just to give you some levels on the index, Nifty Bank, Rupee and crude oil, well, the Sensex is trading this Wednesday morning with gains of about 180 points as I speak to you. 60,290 is the level on Sensex. Nifty is trading with about 50 points positive bias. 17,960 is the level on Nifty Spot. And Nifty Bank trading with 225 points positive bias. Levels are 42,250. On the rupee dollar front, a slight bit of strength, but quite significant over the last 2-3 days of rupee against the dollar. 81.77 is the level of rupee against the dollar. And on the crude oil front, NYMEX and Brent, well, Brent is trading at about $79.36 to a barrel, and NYMEX is trading at about $74.39 to a barrel. So there has been a little bit of downward tick over the last 2-3 days on the energy basket. To speak on the markets front and the outlook going forward, well, let me just reflect upon what has happened in the past about 3 to 4 months. The level of 17,800 was tested in September 2022. Once again, we went and revisited 17,800 somewhere in October 2022. Third attempt on the lower side, where we once again saw 17,800, was December 2022. And very recently, last week, we again went towards that 17,800. This morning also we went closer to that 17,850, 17,800 levels, and then we bounced back. The reason why I'm mentioning these levels, friends, is because it is relatively important. Before we reclaimed the earlier high and then made a new high in first week of December 2022, these were the levels which were acting as resistance, and markets did spend quite a bit of time, Nifty I'm talking about, quite a bit of time somewhere around 17,500 and 17,800. And why the significance of 17,800 is because, like I just mentioned, we've seen these levels at least 3 to 4 times in the past about 4 to 5 months. So let's hope that this 17,800 levels hold out. It may happen that intraday you might breach that level, but I think what is very significant for all of us to keep our eyes on is whether we are giving a close below that 17,800. Marginal plus minus 25, 50 points may not be of much significance, but a relatively lower level below 17,800 could open up a little bit of downside, wherein again, 17,500 could be the next level to watch out for. But let's hope that it doesn't do that. And the reason why it should not do that is because of the third quarter earnings which have started to unfold. We saw TCS flagging off the earnings season. Numbers were more or less in line. Some numbers were better. On the profitability front, there was a little bit of marginal miss, if you will. And if I have to take a clue from the numbers from TCS, let's hope that the rest of the pack in the IT universe delivers in line or better and does not disappoint. And it is significant because IT weightage on the Nifty is quite large to a certain extent. So if the IT does not disappoint in earnings, then I think the sanity level of 17,800 should hold out. Of course, we will have to see other sectors and companies as well, wherein there will be concern in terms of earnings for certain sectors like banking and NBFCs, autos, FMCG may deliver a little bit of positive number. Weakness could be in form of real estate, infrastructure, power, etc., etc. So this is the broad basket. Capital goods engineering is also likely to do well in terms of the earnings which will be witnessed for the third quarter. Going forward, friends, Q3 earning seasons as well as the uh, budget will play a significant role. And on that front, expectations from the budget will build up as we go closer to the budget day, that is 1st Feb 2023. But my sense or our sense is that it's going to be one-off event. Over the last couple of years, the significance of budget has kind of reduced, and our expectation is that it should be more of a budget which focuses on reforms, creating employment opportunity, spending on infrastructure, and of course clearing of certain hurdles in form of taxation. This will, and one more significant aspect to look at will be uh, how do we open up uh, our boundaries in terms of foreign direct investment, since we have Europe plus one and China plus one policies unfolding all across the globe. So this is going to be the broad kind of outlook. On the higher side, I think 18,150 to 18,300 could be the immediate resistance. So broadly, what range we are working out, at least in the near to short to mid term, on the Nifty is about 17,800 or thereabouts on the lower side, 18,150 to 18,300 on the higher side. I think that's going to be the broad. And once again, I think what we witnessed some time back, consolidation, market could see a little bit of consolidation period before we move on the higher side. And it's always better for the markets to consolidate so that the next higher level could be much easier to last on the higher side. Stock investment ideas from our side, as always. One is from the mid cap pack, Prince Pipes and Fittings. This is a company which is a large player in plastic related pipes and fittings, has got a sizable market share, and with the government policies unfolding, I think it's a great opportunity to look at some stocks in this universe. So Prince Pipes and Fittings is the first investment idea from a long-term point of view fundamentally. And the second one is on the fallback of auto numbers that we've seen month on month. We may have spoken about this stock earlier, but reinforcing our confidence is Ashok Leyland, a pure commercial vehicle play. And our sense is that the month on month numbers for the CV segment is going to be much, much stronger compared to the other verticals. So Prince Pipes and Fittings and Ashok Leyland are the two investment ideas. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.